Now for global business updates, Rotus Oddiri joins us here in the studio. Rotus, good to have you in the studio.
Good morning, Dr. Bati. Good morning, Vimbai. Good morning, Rufai. Good morning to all our viewers. Happy New Week. Just Kenya and Nigeria we're looking at today. William Ruto finally yesterday addressing the protests put forward by the Gen Zers with respect to the fiscal bill, the finance bill, which could possibly scale third reading tomorrow after they do a clause-by-clause review. So here yesterday he said on Sunday, I'm very proud of our young people. They have stepped forward peacefully. And I want to tell them that we're going to engage them. We're going to have a conversation so that together we can build a greater nation. We'll bring you a full interview with Johnson Nderi. He's an economic analyst and a corporate finance specialist. You listen to him here talking about government spending, and you will be amazed that he's going to mention renovating houses for officials and also office of the First Lady, which reminds you of which country? Here he is.
Cutting taxation cutting spending is achievable. If you look at the various items that they have, for example, they've had cabinet assistant secretaries. That's an unconstitutional position. You've got funding going to renovation of deputy president's residence, going to the tune of 600 million or 400 million. I don't think, that house is still quite new. I don't think it requires that kind of funding to renovate it. You've got funding going to the office of the first lady, which is also an unconstitutional office. So there's a lot of fats in there that can be cut. Per diems, traveling, So that is one area. I think the society believes there's a lot that can be cut without affecting the core services of government.
All right. Then also, I asked him about whether or not William Ruto is in a tight spot or he should be commended for making tough choices. And I do want everyone to pay attention to him talking about policy continuity, the policies that got Kenya into its debt crisis and whether they were continued by from Kenyatta to Ruto. Here he is.
I don't think there's any recommendation here because the credit crisis, first of all, we're in a credit crisis that government walked into with its eyes wide open. The president has been in this government. He was in the previous government for 10 years. So none of this is new to him. So the policies of the previous government are what put us in this credit crisis in the first place. Now, the other problem is he sustained the policies that put us in the credit crisis. So I didn't see any, save for trying to raise tax revenues, which so far has failed with regards to containing the credit crisis. He's not done anything else substantive with regards to managing the debt crisis.
All right, so that brings us to Nigeria and just policy continuing. So my man Rufai, maybe it's the work of Zeus that I came into the studio today because we have to talk about debts and something that you brought up on Friday, saying that President Tinubu in 1 year had borrowed almost half of what Buhari borrowed in 8 years. Remember, I was a bit thrown off by that. I said, let me go back and look at the numbers. But just to recap, here's what Rufai said on Friday.
Nigeria are pretty much trying to block your fiscal deficit. When you look at the loopholes in Kenya, exactly what is happening in Nigeria. For us, we have taken more debts. That's why you see the DMO is saying that our debt has increased to 121 trillion from 7 trillion. What it means is that in 1 year, President Tinubu has borrowed close to half of what Buhari borrowed in 8 years. That's what it means, pure and simple.
Real quick, if we go back, let's go back to 2015, right? And what President Jonathan handed over to President Buhari, just looking at data from the Debt Management Office. So external debt, 63 billion. Exchange rate of 196, you get 12.1 trillion. Do take a look at the dollar debt. This is debt as of June of 2015. Fast forward 8 years later, to 2023, what Buhari handed over to President Tinubu, the debt, external debt went from 63 billion to 113 billion, which is a 70% increase. In exchange rate of 770, remember when Tinubu came into office, it was 440. He devalued the currency in order to bring liberalization to the exchange rates, and then it's been climbing since then. So at 770, you get 87 trillion. Now, a year later, the data that Rufai was looking at, look at that. The dollar debt is at 91.4 billion. So it went from 113 in June of 2023 to 114 billion in September of 2023, and fell to 108 billion in December of 2023, and then fell further. But take a look. Your exchange rate is now 1,330. So if you multiply, you get 121 trillion. And what Rufai said on Friday was simply subtract 87 trillion, what Tinubu met when he came in, minus from 121, you get 34 trillion or so, which is almost half of the 87 trillion that Buhari left office with. So you can see the exchange rate dynamics, and you can play with scenarios. If President Tinubu had decided to keep the fixed exchange rate of 440 when he came into office, multiply that by the 91.4 billion, he would have 40.2 trillion, which would be less than half the domestic debt he met when he came in. It was 770 last year. If he had kept the exchange rate fixed at 770, instead of allowing a managed float for the naira to find its level, you subtract that, you multiply that 770 at that same 91.4 billion, you would get 70.33 trillion, which is less than 87. Now, if you want to go really extreme and go to the other end, remember when the naira was at 1,008 and was nearing 2,000. If the naira had gone to 2,000 to the dollar, that 91.4 billion would have been 182 trillion, and you would have been screaming, saying that in 1 year, he's borrowed ×2 of what he met when he came in. If you look at just look at exchange rates, the dynamics of a weaker naira, higher foreign debt burden doesn't mean you've borrowed more. It is the interest payments on your debts, basically. If you borrow 1 naira at 440 and you don't pay it back when the naira goes to the dollar 1,130, you're paying back more. But it's the same $1 that you borrowed. But also the flip side of that is that your trade numbers look better. So our Q1 trade surplus was 6.52 trillion, 195% year-on-year growth from what we had in the prior year. But then also you have FAC allocation. So it's a multi-pronged thing. It's not just one story.
When you look at it, from 87 trillion, your domestic debt, to 121 trillion, we racked up more numbers there.
Based on the exchange rates?
Yeah.
Yeah.
So we racked up more numbers there. So when you go back on your books, is it higher than what you had before?
Well, it's value. Remember when we're talking about financing debt?
So the question is, is it higher than what you had before?
In naira terms, yes.
Yeah,
but in dollars, it's lower now.
That's just it. So in naira terms, it's higher and impacts more of your books than what you have before.
But you didn't borrow more. That's
wait a minute. Wait a minute. In borrowing more, the effect of the devaluation is what you're suffering. And that's what it's a debt.
But if you wanted it to look good, he could have fixed the exchange rate at 440 and got 40 trillion. That's what I'm saying.
If he wanted it to look good, he could have fixed the exchange rate. But when he floated the exchange rate, did you see the dastardly effect of when he's not able to even find a rate based on the 700 that said was going to be the fair value that the minister was saying?
The Naira is allowed to find its value.
So that's what I'm saying. Today, you are still finding your value. You found it up to 1,900.
Fine.
Now you're still finding your value. And in the end,
trade,
in the Rotus,
FAC allocations,
in the end, he came back and still started defending, which also hemorrhaged some monies, over $1 billion or two, part of your, what is it called, your reserves.
But he didn't borrow more,
So when you look at it,
yeah,
he has increased the numbers, and this is as a result of him being in power, and this is as a result of being his actions.
The numbers are there, so everybody can see the numbers.
The numbers are there.
The dollar debt has gone down.
The dollar debt has gone
because of the exchange rate, the Naira went
has
up.
Gone up.
So he didn't borrow more than half of what the prior president did.
The numbers went up. And he accumulates the cost.
Very quickly.
We're fine. Okay, all right.
To Kenya and the Gen Zs, everybody is talking about that. So much happening because today is quite a decisive day in terms of what's going to happen in Parliament. Because within the ruling party, you know that there's division as well. Because William Ruto and Gachagua, his deputy president, are also fighting. So there's dissent within the ruling party. And then from the opposition party, there's some opposition MPs who are said to, apparently they're being threatened that they'll be punished because they voted in favor of the finance bill, of the tax increase. And, you know, just for perspective, 16% VAT on bread is just insane. So they've pulled that out now.
Yeah.
So the conversation this morning from opposition MPs is, do we outrightly reject this bill, or do we come with more suggestions for amendments to happen? But it looks more likely that the opposition is just going to throw out the entire bill simply because they want the ruling party to just, you know, to bury themselves.
Well, a number of issues I want to deal with. Yeah. And there are, you know, I think issues that should be of interest. I saw a story yesterday where the Dangote Group was reporting through the vice chairman of the Dangote Industries Group, Devakuma, I think that's his name, about how an attempt is being made by IOCs to sabotage the Dangote Refinery by making it difficult for them to have access to crude oil, and by also jacking up the price. And now Dangote Refinery is forced to go and look for crude oil from other parts of the world, the United States, making production difficult, making costs, you know, higher, and all of that. And I think that that is something that the upstream regulatory agency, led by Gbenga Komolafe, should look into. The other issue that is on the table with regard to that is the standards, specifications of the kind of crude oil that we have in Nigeria. ECOWAS has taken a decision on that. Also, Ghana has a bill, they've passed a law, saying that, look, you don't bring any kind of crude into this environment. I think that the Nigerian government has a responsibility to support the Dangote Group and to make sure that the IOCs do not in any way sabotage. You'll recall that when Alhaji Aliko Dangote granted an interview to CNN, to a lady called Elise, this was one of the points that he pointed out, that, look, it was an act of courage to even make this, 650,000 barrels per day, biggest refinery in Africa possible. I think that story being out there, we should note it. Now, today, Fidelity Bank is doing wraparound adverts that I have seen. They are doing public offer, they are doing rights issue. The first bank to do so in the last 15 years. And the first woman to do it, Dr. Onyali Ikpe, who is the managing director of the company. I think it's important. What it means is that Fidelity Bank anticipated the intervention by the CBN in April 24, that banks should do something about their recapitalization. And I think to the extent that Fidelity Bank has taken the lead in this regard, it should be noted. It's an interesting, remarkable development. Finally, still on banks, UBA, United Bank for Africa. I saw Tony Elumelu dancing on Instagram yesterday. You know, his wife, Awele Elumelu, founder of Avon Medical Practice, co-founder of Tony Elumelu Foundation, director of United Bank for Africa, turned 60. And Tony Elumelu was dancing, he was shaking his chest like this. Well, anyway, congratulations to Dr. Mrs. Awele Elumelu, and also to Tony Elumelu, who is showing us that when your wife is having a birthday, you forget about banking. You be the husband and you dance and you. So that I'm sure he got a good dinner yesterday. Yes. I mean, you must have been. Well, thank you very much, Rotus.